Welcome back. We've had a packed show this time around on closing trades. Joining us now is Kunal Bothra, of course, and Arpit Biriwal, Motilal Oswal Financial Services, joining us. Kunal, let me start with you. What do you make of the moves on the market? We're somehow in the green after all of the flip-flop that we've seen. But your take with regard to the moves today?
See, I think there are a lot of positives for the markets today, not just in terms of the Nifty and the Bank Nifty gain, but there are multiple things which have happened. One is the advance decline ratio has been favorably positive. We're almost at 2,300 to the advances, so almost 800, 850 the last I had seen in terms of declines on the NSE. The second and the most important part is what happened during the day was after this gap up which was seen for the index, there was a gap filling exercise which we've done. So I think the lower end of the gap was around 25,173 approximately for the Nifty on the spot levels, and we managed to make a low of 25,175, 176 thereabouts on an intraday basis, which means that gap filling is done. And generally, when we see gap fillings, when it gets completed, the market goes into a very stable kind of a trend. So I think I would also expect now that going forward, you would probably expect that the range for the Nifty would now be at 25,000, 25,500 mark, and 25,200 to 50 should act as a pivot support for the index. We may gradually build on to the gains which you've seen today, but I think that will of course depend on how the global cues and the setup across the globe is going forward.
Okay, so that's the take on the market right now. Arpit, hi, good afternoon. Talk to us about the move that we're seeing on some of the sectors. Realty, yes, it has improved from the day's low, but continues to be the top sectoral loser. On the flip side, PSU banks looking extremely strong today, 2.25% uptick on that front. How are you reading both of these indexes?
Very good afternoon to all. So if you see overall from last couple of months, the market has been a very trending for few sectors, whereas the downturn for the few sectors. And particularly if you look at the sector of Nifty Realty. So technically, if you look at the weekly chart from last almost a couple of weeks, the index is forming lower structure. And this particular month have seen almost a corrective of 10%. And right now also there is no major reversal. So look at the setup of Lodha, Prestige, DLF, Oberoi, definitely all are under weakness. And look at the setup on the weekly time frame, there's no major reversal. So our sense is that the weakness is likely to continue, and it's better to avoid any long side position for the Nifty Realty. Now talk about overall PSU. So generally the banking space has been quite outperforming relatively. Only we have seen in the last couple of days some corrective move in banking space, but the PSU index is very strong, and that we can see clearly with the price structure of SBI and Indian Bank. So I think from a setup wise, PSU banks can definitely head year on from also for next 3 to 5% moves. So our top picks within the PSU banks on the long side would be, first would be SBI and second would be Indian Bank. So technically the chart wise, SBI is in a very strong uptrend, forming higher rise, high low structure on the monthly frame. In spite of market volatility in last few days, it is holding its gains, trading a life high territory. So I think SBI can see a good up move of 4 to 5%. Along with that, Indian Bank also post result has seen a very strong recovery from the lower levels back to its previous all-time high. So our sense is that going forward, it would be a very stock-specific, sector-specific action, and within the PSU bank space, Indian Bank and SBI would be a preferred pick.
Okay, so that's the preferred pick. Indian Bank, SBI looking good from the PSU bank space. Mayuresh Joshi, head of equity at MarketsMint India, also joins us on the show. Mayuresh, no complaints about the way the market breadth has been today, the way the market texture has been. But yes, we've seen incremental weakness in the last week or so. Talk to us about where the markets are headed from here in light of how the earnings have been so far.
Very good afternoon. I think earnings so far have been a mixed bag. PSU banks have largely held up in terms of their earnings delivery. But apart from that, I think it has been in line with estimates or a tad bit below par so far in terms of numbers that we probably see. But going forward, I think once the entire channel inventory rationalizes post GST, when you're talking about consumer durables, discretionary or staples, or in general, everything that is affected by GST in terms of reduction. Somewhere down the line, I think as we head into Q4, I think numbers should start coming back very, very strongly. On top of that, I think the expectations as a base case scenario in terms of earnings growth spread over the next 12 to 15 months, these ought to be anywhere between 12 to 14%, which is significantly higher than what we've discussed or witnessed in the past few quarters. Now, barring global events, specifically Trump tariff tantrums, and Trump geopolitical tantrums. I think the markets might be volatile for some period of time because it really depends on what statements he probably makes. On the other hand, the US India EU FTA deal might be a game changer and might be a massive game changer for India as that fructifies. If by some stroke of luck we do get a US trade deal over the next few days and weeks, I think it will allay the nerves that the markets probably had. And then I think it will focus back to earnings, which are looking relatively better placed as we head into the next financial year. So do not foresee a structural downside, though the number of distribution days that we see at MarketsMint India have definitely gone up. But I think our founder always used to say that such pessimistic times are the best times to find out good sectors where leadership stocks are making bases for the next bull run to come.
Okay, so that's words of wisdom coming out to navigate the market, right?
Mayuresh, let me come to you with regard to one of the other pieces which has been a big mover over the last couple of days. You had a Credit Access Grameen came out with numbers. Today you'll have a Bandhan Bank which will come out with numbers. You had an Ujjivan which came out with numbers. Stock is up 8%. You're seeing very strong tailwind for some of these small, mid-sized banks. Good time to bite into, and if so, what are your preferences?
Harsh. No, I think two things. One, I think the broad expectation when it specifically comes to small payment banks is the ecosystem should generally smoothen out over the next few quarters. And therefore, I think the excessive pain that most of these stocks had witnessed because of the slowdown that was witnessed for the MSME, SME segment and delinquency issues in a few quarters before this. I think that was what was plaguing the ecosystem as a whole. But as things are plateauing and as the expectations are now growing stronger, that growth will come back strongly and expectations of asset quality pressures expected to wane out might probably be an improvement both in terms of reported numbers and specifically return ratios is something that the street is probably looking at. For credit access in particular that you ask, I think the cost to income ratios have come down quite nicely over the last few quarters. The expectations in terms of how GNPAs and NPAs are now getting placed are relatively better off, as I said, compared to the last few quarters as well. Capital adequacy is close to 25.5% as far as Tier 1 ratios are concerned, and therefore extremely well capitalized to probably ensure that there is a strong advances growth on the balance sheet that probably happens. The ALMs for most of these banks are probably looking a lot stronger as we speak. And as things improve and as there is more clarity happening in terms of both the macro ecosystem and from a balance sheet perspective, the return ratios will also stand out to be relatively stronger, which has always been the case with the Credit Access Grameen. So I think strong set of numbers. But within this pack, in our momentum portfolio, the swing portfolios that we carry, Equitas is something that we are carrying as a clear disclaimer.
Equitas looking good, and that's the take coming in on some of these financial names. But let's talk about some of the top gaining stocks today. Kunal, it's Waaree Energies, that's up about 9%, and Granules ahead of its earnings tomorrow is up 6%. How are you reading both of these charts? Waaree Energies, good set of numbers, and the stock is also soaring.
Well, yeah, I think the stock did pretty well for itself in the first half, and volumes today are on the much higher side. Expectation is that the stock could probably get back into a turnaround mode, but the breakout point for Waaree Energies on closing basis is around the 2650 mark. We're discussing this in the morning also, that the stock has this potential resistance on closing basis about 2650 level. So it looks like that the stock would just about close mildly lower to this resistance, which means we wait for maybe a day of confirmation further for the stock price. And ideally we've seen that when stock prices go into such kind of a gap up move, there is a mild consolidation which happens into the stock price subsequently in the next couple of days. So I think in that context, maybe I think for the next couple of days, we'll watch out for this 2650 levels for the stock price. Granules, on the other hand, I think the stock is looking quite strong, attractive. It's bouncing back from its previous supports of 540 levels. This was the support the stock had tested in the month of I think October, November 2025, and from there the stock had shown at least a 20% kind of an up move closer to 620 odd mark on the higher side. So expecting a decent bounce back for Granules. On the higher side, would look out for 585 to 600 as an immediate target.
Arpit, what is your reading on Interglobe Aviation ahead of its earnings anytime now? We'll try and understand what the street is penciling in too, but how are the charts shaping up?
If you see overall Indigo from last couple of weeks, it has bounced stuck in a broader range. From last almost 6 weeks trading in a broader range between 4,600 to 5,200 levels. On the immediate basis, if you see it's consolidating between 4,750 to 4,950 levels. So look at the setup wise, the weekly scale it has negative formation of lower highs above 4,750 levels, but the real momentum would be created above 1,450 closing. So any closing above 1,450, definitely the stock can head towards 5,100, 5,200 levels. So I think risk reward wise, definitely a long side would be favorable because that's a lower band with keeping stop loss around 48.20. One can go long for an upside move towards 49.50 and then 5,050 levels.
That's on the technicals. That's Interglobe Aviation that we're talking about. Earnings expected anytime now. We have Shrishti who's joined us to give us a sense of what the street is penciling in when it comes to these numbers. Yes, remember, this is a stock that was largely impacted by the cancellation and the entire issue that we saw around Indigo, the DGCA order also. We'll try and get in Shrishti in a bit from now. But just taking a look at the market right now, on the losing side, from the broader end of the market, it's IIFL Finance 12% lower over there. PNB Housing Finance also looking very weak today, 7% cut. ABLBL, that's Aditya Birla Lifestyle Brands, is also slightly lower. Kalyan Jewelers, Hindustan Copper, Hindustan Zinc, the metal names are looking slightly weak. Talk to us about your view on some of these metal names, Mayuresh. Slight profit taking being seen today?
For obvious reasons, because A, the stocks had moved up quite significantly, and when there is a risk off, that probably happens or the market perceives, like we are hearing statements yesterday. The take here is that profits are being booked for both these reasons put together. Having said that, I think the base metal rally has been profound over the last few weeks, last couple of months in particular. Gold, silver, you've probably seen copper, aluminium, zinc move to their all-time highs based on a plethora of factors. Strong demand expected, supply constraints, demand-supply imbalances, stacking up by a lot of governments in terms of sovereign as far as gold and silver is concerned, silver as a critical mineral list, China banning exports. So I think a whole host of factors which propped up the prices. But our own sense is that looking at the past 2 decades in terms of the commodity moves, it always starts with base metals, it then transgresses to the ferrous players, and then it probably moves to crude. So I think if history has to repeat itself, and with a lot of implications with the new safeguard duties in place, specifically for steel makers, where realization growth can inch higher with a lot of restriction put in on imports, the duties have been increased quite substantially, more than $600 in terms of duties being levied, which will imply that domestic steel makers might probably have utilization levels which might exceed 80%. And on an average, an EBITDA, a positive EBITDA convergence of more than 3 to 5%, which makes us believe that ferrous players, that is the steel players, might be next in terms of the commodity rally. They're trading at 6 times EV/EBITDA for the sector. I think the mid-cycle valuation that close to 7.5 times. So they might get there, in our opinion, looking at history, and therefore remain a tad bit positive selectively on a few of these ferrous players as the next leg of the commodity rally occurs.
Okay, hold that thought, Mayuresh. We're joined by Nirmal Jain, founder